Welcome to Listen to the Market for Tuesday, February 21. Today I want to walk you through and show you how to apply the AA rule set and the actual meaning of the AA rule set. In that context, I'm going to walk first of all through a selling example, and then we'll go back and look at the obvious movement that everybody knows was caused by, what was it again? The supposed bailout of Greece. Looking at the scenario in the market, before that announcement came out, there were some classic textbook L.I.V.E buying setups there, and the AA also came into play. So starting out, normal routine, plotting the previous day's high up there, previous day's low was way down there. The projection from Monday for Tuesday was number 1, expect higher highs. Number 2, don't expect Tuesday to be replete with opportunities. Fancy way of saying, don't expect an expansion of range. So let's start with the AA exercise. The hourly chart is lining up with the 30-minute chart, is lining up with the 15-minute chart. All bars finishing at the same time. And interestingly enough, nudging exactly, virtually to the pip, the previous day's high. Let's see what happens next. The market opens, breaks above the previous day's highs, and also breaks above the previous spike high in there. It doesn't break above there, but breaks above there. Being above yesterday's highs qualifies for a AA. Being above, trading above that high there on the 15, which is that high there on the 30, which is that high there on the 60, qualifies this as a FO sell. So formally you'd be looking to enter just on that knowledge down through those lows. Let's see what happens on the next bar. So we now have two 15-minute bars. Applying the L.I.V.E concepts and setups just on one time frame means that you're already short now basis the 15-minute. Two 15-minute bars equals 1/2 hourly bar. So the half hourly bar again clearly shows you that the sellers were the dominant force once the market broke above those previous spike highs. We still don't have a top-down approach. We don't have a confluence between the 60-minute. The 60-minute is not a selling setup. Next bar comes along on the 15, and that presents a RTV sell. So the second bite of the cherry looking to go short on the break of that low at that high. Rule 101 really does preclude from adding to that existing short because you don't have enough fat in the distance between your entry and your trail to justify taking on board another full 1 hour risk. Next 15-minute bar comes along and shows yes, the RTV sell was operative. We have broken below the 15-minute lows there. The 30-minute bar similarly now shows that that breakout sell has also been entered. The 60-minute is now complete, and it also on a completed bar basis shows a FO sell. So what we did here was very simply quietly stalk the market to see what it does when it breaks into the AA rule set, and the AA rule set stands for aggressive ambush. So perhaps now you can see why it is named the AA rule set. The first entry was preemptive. There was no sell set up on a completed 30-minute bar. The 30-minute bar was not complete. The only setup that was there completed was an FO sell in the AA region, courtesy of the 15-minute. Let's see what happened now, just trailing this down on the basis of a 30-minute. Bearing in mind the initial entry is through there, which is just in through here on the 30-minute. So the trail on the 30 brings you to break even already. So knowing when to roll them, knowing when to fold them, and knowing when to hold them. All's well, going down the escalator. Or is it the elevator shaft? 2 half-hour bars, 1 hour bars complete. broken down below those lows as a formal buying setup. Our stop's now way better than break even anyway. Courtesy of the proprietary entry and exit formulas, the trailing stop loss was not hit. It was actually above the very high of that bar. No, I don't use things like average to the range. It's actually a formula applied to the prices. So it's still short from in through there on the 15-minute basis. Down we come again. Down we come again. Another warning to say, hey, maybe this is a low coming up. But short from there, locking up a nice little R return in there, but not setting the house on fire. And stopped out in through there. So that shows you the preemptive use and the power, from my perspective, behind the aggressive ambush concept. Next, I want to come back to show you exactly how the same concept applied, following the L.I.V.E rules and setups and concepts to get you long for this supposed out of the blue funny mental induced rally. Let's now walk through the eyes of the L.I.V.E setups and L.I.V.E concepts to see what the state of the market was before the funny mental that came out about Greece that caused the market to rally strongly out of the lows that we don't see on the chart yet. 1 p.m. my time, Vanuatu, outside the optimal time frame, using the 1 hour chart alone, there was a formal promise sell setup. Up until now, I've been talking about promises of higher highs, promises of lower lows. I haven't gone through the exact rules. There are 3 in relation to a promise sell and also a promise to buy. Suffice it to say, for L.I.V.E students, this was, you will recognize, formally a promise sell. So the entry below those lows, ISL above those highs. Let's just walk this through. 15-minute bar shows you that you would have entered on the break of those lows corresponding to the 60-minute lows. Second bar of the campaign, viewed through the eyes of the 15-minute bar, shows lower high, lower low, another promise of lower lows to come. 30-minute view, likewise, is a promise of lower lows to come. Currently short, the hourly chart is down through there somewhere. The 15-minute chart, this 15-minute view, shows you a fake out buy against that, as does the 30-minute view. Now, up until now, I've been discussing the AA, the aggressive ambush, purely in terms of breaking the previous day's highs for a AA sell, breaking below the previous day's lows for a AA buy. Once you've internalized the concept of the aggressive ambush, put together the L.I.V.E setups, you will recognize that the AA does kick in whenever a market breaks below any time frame's previous low as a buy, or above a high, the AA kicks in as a sell. So formally, this now is in AA buy territory. Next bar comes along, bearing in mind you're short below there. Whilst you're not using the 15-minute for action being outside the time frame, doesn't mean you don't look for clues as to what may be going on. The clue says, okay, we have aggressive ambush coming into play. Why not lower the stop to a break even? After all, break even can't hurt you. Let's see what happens next. Out of the blue, supposedly, the fake out buy, aggressive ambush mode is triggered. Long in through there. Already you've got a 1 hour return on the table plus. Let's have a look at the view now of the completed 30-minute. And bearing in mind the projection for Tuesday was to break Monday's highs. Next bar comes along. Actually, we can do the 1 hourly now as well. That's what the 1 hourly looks like. Now you can see that the preemptive application of the AA gets you in before the completed bar on the 60-minute. Another way of putting it, A movement up will start first, of course, on a smaller time frame. That's where you expect the first setup to appear. Then the second, then the third on higher time frames. This has to be seen as a bonus. Common sense has to kick in. Need to go to some form of aggressive campaign management routine. And there we have it, fulfilling the prognosis from Monday that Tuesday will break above Monday's highs. Another piece of market knowledge that is really worthwhile remembering and bearing in mind is that whenever a market springs from a level based on some sort of event, news, announcement, come what may, professional traders, translation, people who've been trading for a while, will know that the market always goes back to that same level. Another reason to aggressively trail 15-minute allows you to bring your stop up to there, again locking in a multi-R return just for that quick sortie had you been around to watch. Fast forward, 1 hourly chart, sees you at least being stopped out through there. What I'm doing is building a house, starting with the foundations of the L.I.V.E concepts, the L.I.V.E ideas, and gradually introducing rule sets, campaign managements, and money management routines as well. So I trust you're enjoying this. I do urge more comments, and no, I am not cherry picking. That's it from me. Over and out.